Hey, everybody, it's Tim Hart, branch manager of VanDyk Mortgage here in Fort Myers, Florida, coming to you with a guy that I massively respect in the business. I'm honored that he gave me a little bit of time so he can share his knowledge with everybody. It's Rich Passasante, our assistant COO, Chief Operating Officer. I think you're the Chief Operating Officer, Rich. I'm just telling you. Sorry, Jeannie. But Rich, thanks for being with us today, man.
Hey, Tim, thanks for having me.
Yeah, man. I know you're a busy guy, so we won't take a lot of your time here. But I wanted to talk with you because we had a change come through. An event happened in June, and Champlain Towers collapsed over at Surfside around in Miami. And I think I looked at, I think the total was like 98 people, or almost 100 people died from that. And that event, though, has brought on a lot of changes for the condo market. And that's why I want to bring you on, because this is going to go out to a lot of realtors and buyers that are looking at condos, and they need to be aware of these changes that are happening. So I appreciate you coming on.
Yeah, for sure. Thanks for having me again. And, this is I think when we all saw this happening over the summer, especially those of us that worked in real estate and mortgages, especially knowing what we have to go through to approve a condo project, we were just waiting for something that come out from Fannie Mae or Freddie Mac or HUD that would say, you are going to start needing to do extra due diligence here. And sure enough, in October, they did roll out some guidance that is effective for January 1st. And
this is Fannie Mae, though.
Yep,
right?
this is Fannie Mae right now, and then we expect, Freddie Mac and HUD, they'll all have their own guidance here coming out shortly. But Fannie Mae is the big one, because they're kind of the industry leader in condo lending as far as financing goes. So, pretty much when Fannie acts first, the other agencies, typically follow with their own spin on that guidance.
Yeah. And so, like, let's go into a little bit of background for like if a buyer's watching this and they're thinking about buying a condo, or a realtor, maybe they're a little newer in the business, or they're just looking for knowledge. Can you walk us through a little bit of the process before we get into the changes that happened on, like, why does the HOA matter to a borrower that's going to buy a home? Can you get into detail about that?
Yeah, for sure. So, when a buyer goes out and is buying just a single family detached dwelling, whether it's 1 unit, 2 units, whatever it may be, that collateral piece is evaluated on its own. It's not part of a larger structure or a larger building that's required to be maintained by an association that needs to make sure that has the financial health to be able to keep up with the project maintenance, and then also, to somewhat the political will to keep up with the project maintenance also, because HOAs, they're voted on by the association members, and it's really that HOA that determines the health and viability of the project as a whole, not just the finances. So with that being said, anytime somebody goes to purchase in a condo association or a co-op association, especially when it's a grouping of attached units, we have to take the extra measure of making sure that that association is, is viable and is doing its job. And given what's happened in South Florida down to Miami, it's come to everyone's attention that, maybe some of these projects that are older than 20 years, so some of these projects that were built in the 70s, 80s, we need to make sure that their HOAs have been keeping up with them, that there isn't any kind of significant deferred maintenance or structural issues that could affect basically what happened at the Champlain Towers, some kind of devastation to either some part or all of the project that isn't just a force of nature. Obviously projects are covered, a hurricane comes through, something like that, that's kind of catastrophic coverage. But just what's going on, as far as just the general upkeep that, could cause something like this to happen. Obviously down in Surfside, the Champlain Towers, there were definitely code violations, building violations that were just ignored or just kind of overlooked by everybody. And it led to this tragedy that took place. And it's just, again, made people that are lending on these kinds of properties think, hey, we need to do some extra due diligence here. And, we're at least going to have this be temporary in nature. That's what it's being called right now. It's temporary guidance.
Oh, is it? Okay.
Yeah, it's nothing that's been permanent, but there's also been no expiration date on it either. So, that's why, I use temporary.
It's never going away. This will be the new normal.
Right, pretty much, probably.
Right.
And maybe it's not a bad thing because, when you think
Yeah.
about you as a borrower or as a buyer, you go and you purchase a loan in a condo project, or you purchase a home in a condo project and you take out a loan, something happens to that condo project, your collateral is damaged, and you can decide to walk away from that. And of course, you are still obligated to repay your loan, but you don't have that collateral anymore. What's the incentive for you to keep paying? You can just walk away from that loan, and of course, the bank can foreclose on you, and that's going to have later credit implications. But at the end of the day, it doesn't do anyone any good. It doesn't do you any good as the borrower. It doesn't do the bank any good as the lender. So, that's really where we're coming from with looking at, doing a deeper dive and a further look into, what's going on with the safety, soundness, and structural integrity of the property there.
Yeah, and that's one thing, that like if a buyer's watching this, or the realtors with like the buying process. I mean, you have the underwriting of a borrower, right? Income, credit, assets, etc. And then normally going to have the appraisal, right? That's going to get underwritten as well. So, the purchase price, the comps, all that stuff. And now when you bring in the HOA, you have they basically get underwritten at, just like everything else does. Like they're part of the process. So it's an extra layer for the lender. And so people need to be aware of these steps that have to be taken. And so can we get into detail about a few of the changes that's happening?
Yeah, for sure. So anytime we're reviewing a condo project, like you said, Tim, we have to review the borrower, we have to review the appraisal, and then we have to review the HOA. Mm-hmm. And there are different levels of HOA review that we may need to do depending on how much down payment the borrower is making. So, if you're a real estate agent out in the market, you might have heard something called a full review versus a limited review. And, that's driven by how much money is the borrower putting down. So for example, in the state of Florida, if they're buying a primary residence, it's 25% down. If they're buying a non-owner occupied investment property, it's 30% down. And that's the difference between whether we're doing a full review or a limited review. The big difference between a full review and a limited review is when we're doing a full review, we're having to vet the entire financial health of the association. So we're looking at budgets, we're looking at balance sheets. We're asking a whole lot more questions than with the limited review, where we're asking just a couple of questions and we're relying on the appraisal to make the decision about whether or not the association is approvable. And one of the things that Fannie Mae has said that we need to do is, you're not really going to change your review process, but you're going to have to take a deeper look at the documentation available to you and see if there are any more questions you have to ask. So for example, when we do a full review and we're taking a look at the financial stability of the association, we're having to do things like look at budgets. And on the budgets, we might be looking for line items that are that reveal, why is there a special assessment? What is it for? If it was just for, improving the landscaping or painting or something like that, obviously that's a non-issue. But if it's for a full roof replacement, that's where we're going to have to get into more questions and find out, why are we doing the roof replacement? What were the implications of that? Is it just routine maintenance, or is it because there was damage to the property and, the roof really does need to be replaced because there's some kind of imminent, danger or threat there to the units or something like that. Because again, like we talked about before, hurricane comes through, all that stuff's covered by insurance. The roof is damaged because you've just been putting off replacing it. The units underneath it become damaged. The units underneath those become damaged. That may not necessarily be covered by an insurance claim. So those are all the things that we're having to think about and consider. The same thing with any kind of litigation that the association might be involved in. What's the nature of the litigation? If it's something having to do with, you know, let's say the HOA contracted a builder to do a repair to the property. You know, what was the repair of the property? Did the repair get completed? We understand you're in litigation with that contractor. Is it because they didn't complete the repair properly? Are you just having to recoup funds from it? Did they not perform? And if they didn't, what did you do? Did you go and you hire another contractor? So there's just a lot more layers of questions that we have to ask here. And then, you know, we unfortunately are left with making the judgment call as the lender. You know, is this something that's considered significant, or is it just considered minor, you know, routine part of upkeeping a project in a building?
So, and that becomes like, I want to say a pain in the you know what, but like, you know, when it's that vague, you know, because like, correct me if I'm wrong, but like if you make your judgment decision on it, and then Fannie disagrees with it or something, well, it could fall back on us, right? I mean,
100%. And since this is such new guidance, you know, obviously, I think, you know, a lot of lenders are going to probably err on the side of caution right now. You know, fortunately, we are a Fannie Mae direct seller servicer here, and you know, we're in constant talks with our partners at Fannie Mae, even Freddie Mac, HUD, to get better clarification and push for more guidance. And you know, it's something that we've been talking with Fannie Mae about for the past 2 months. And I'm not saying it's because of VanDyk, you know, I'm sure a lot of lenders have been asking questions, but I know that Fannie Mae is going to be publishing what they call FAQs. So they come out with these lender letters that, you know, come out with these sweeping changes, and, you know, then people start asking a ton of questions about it. So they will publish what's called FAQs to help us, you know, make decisions every day and apply you know, give us kind of practical implications of their guidance. So, you know, we're looking forward to that coming out in the next couple of weeks. That will hopefully clear some of it up for us and, you know, help us approve more condos. And, you know, again, I think that it's really looking at, is it routine maintenance that's being taken care of, or is it something that's, you know, more significant because there was damage to the project or something like that? You know, is it a matter of updating plumbing, or is it because there was a pipe burst that, you know, really has to be repaired? You know, what's going on there?
okay. So, I mean, you know, the budget, you're reviewing that. I want to say with a fine tooth comb, looking for some triggers in there, right? To make you ask more questions, or not make you, but that you're looking for. And then you have looking for litigation, and then you want to have that explained to you. Being in litigation doesn't mean it's a dead deal, correct?
Correct. There are often times, listen, it's associations are big projects. They typically, you know, it's an often thing that we see associations involved in litigation. You know, it could be because somebody slipped and fell in one of the common areas and is suing the association, or it could be that, you know, one of the unit owners is suing the association for maybe not enforcing a regulation about there being a large dog on the property, or, you know what I mean? Like it ranges from everything to just, you know, the smallest things to, you know, an insurance company not covering damages from a storm or something like that. You know, that's one that we just saw that we had to deny because actually it was down in southwestern Florida. It was in your market actually, Tim. Different loan officer, don't worry about it.
Okay.
Yeah, where we had a pass on approving the association because the association was in a lawsuit with its prior insurance company about damage that took place to the property after Hurricane Irma to the roofing, and the roof needed to be repaired and replaced in some spots, and the insurance company had refused to cover it. So, you know, in that case, had the roof repair still been taken care of by the association, they were just suing its prior insurance company for damages. You know, that's something we probably could have overcome. But since the roof still hasn't been repaired, you know, there's not a whole lot we can do with that project right now.
Yeah. And so are there any other changes that come to mind that they've made?
There aren't any other changes that come to mind. Again, you know, it's really just taking a closer look at all the information available to us to see if there's anything that might indicate any ongoing issues that are significant deferred maintenance or repairs required that affect the safety, soundness, structural integrity, or even habitability, of the project. I haven't seen a project that's had gross habitability concerns, but if there was any indication that the project had to be evacuated, or they had to let the unit owners know that they couldn't live there for a time period, obviously that would have to be, that's a giant red flag for us.
Yeah. Well, cool. Good information. So listen, I'm going to put you on the spot here because if you're watching this, this man runs you've oversaw the underwriting department for how many years now?
Just about 2, a little more than 2, maybe.
Feels like 10. So feels like 10 to me.
After
But
last year, for sure.
if you're watching, so like if you get a chance to talk to a realtor, like what would be a piece of advice you'd give them when it comes to condos? Like maybe they're taking a listing or they have buyers out there looking and they need financing. Like what would you advise them for from your experience?
Maybe talk to some of the other people that have done sales in the project, or make sure that you're talking with the HOA or finding out who that management company is, and find out, what kind of financing has been available to the buyers in here. Has it been conventional financing, or has it been FHA financing or VA financing? And if it was conventional financing, was it full reviews or was it limited reviews?
Yeah.
I think it's something that you could also be using, for realtors to open conversations with sellers and, maybe HOAs to make sure that they're up to par on what the latest requirements are. Because, if I'm a unit owner or I'm managing an association, and I'm just taking myself out of the lending picture for a minute, I want to make sure that the maximum amount of financing is available for my project, because that's going to make sure that the widest pool of buyers is available.
Yep.
And it's going to help maintain the prices within my project. So I think that that's something that as a realtor you can equip yourself with, to help talk to HOAs who let's say you're having trouble selling in a unit or in a project because people can't get financing. It might help you as a realtor to go talk to the HOA about it, make yourself an expert in this stuff, and maybe you get more listings out of that. Or maybe other HOAs might want to talk to you, and you can bring your buddy, your partner Tim Hart in here, as the condo financing guru, and he can help troubleshoot, or honestly anything we can do as the lender to help you as the realtor or the seller, make sure that the HOA is viable. We definitely would like to look at that and help you.
Good advice. I like the plug too. You did good. Appreciate that. So the one thing I will tell people, and this has nothing to do with the HOA, but this is going to be a plug because you set me up with a plug. So I'm going to go with one too, Rich, is we offer something where we can underwrite a borrower without being under contract. So if you're watching this and you're out shopping for a condo, well, one of the biggest stress is you're going to have is yourself being underwritten. So we can have you underwritten and approved with income, assets, credit, your past bankruptcies, whatever, have it all done while you're out looking for that condo or that single family home. You make the offer on that condo and we'll call the listing agent for you and we'll tell them, hey, Rich has been fully underwritten and approved by us. He's a great borrower, blah, blah, blah. We need appraisal, title, and on to closing and HOA approval if it's a condo. That will help you guys out a lot. If you're watching this and you're looking, we'd be happy to offer that to you as well. I wasn't planning on talking about that, but Rich, you teed me up and I cannot pass up on that free plug. So I appreciate that.
Yeah, that is a great point. And the other thing, Tim, I think you can make sure your real estate partners know is, hey, if you're taking a listing in an association, make sure you know who the key contacts are for that association to help the lender out as far as getting all the documentation they need to complete the review. Unfortunately, what we see a lot of times is again, as Tim mentioned, we have to underwrite the HOA also. That's a completely separate processing arm. And we need to know who do we need to contact to get our questionnaire and get all the documentation that we need to complete that review. So, you as the listing agent to be prepared with that info, to hand it right over to Tim. That's going to be super important, because we waste days sometimes trying to chase down and track down the right contact info. And that's unfortunate, because that doesn't do anybody any good.
And also the agents can help the lender. I don't want to say put heat on the HOA, but just follow up, hey, do you need anything else from the lender? Or, when do we expect this, et cetera? Like, instead of it's just our processing team going at this person, the realtors can jump in and sometimes help with that as well, if we know who the contact person is.
For sure. For sure.
Cool, man. You got anything else?
I don't.
That was fun. You need to do more of these. Will you do more of these with me?
I absolutely will. Maybe we can do an update to this one once Freddie Mac comes out with this info.
Okay, cool. Your wealth of knowledge. Rich, I appreciate it. I know you're a busy man. Thank you for taking the time
All right, thanks, Tim.
to be with us. And you guys need anything from me, let me know. Always here to help, always here to serve. Call my office. I have an entire team with me, 239-437-4278. If you're liking this or watching this on YouTube, do your boy a favor, press like, comment if you want, but for sure, subscribe. We put out a lot of content like this to provide value to your life if you're a borrower or if you're a realtor. So again, thank you very much, everybody, for watching. Rich, thanks again, and have a great day, everybody. See you later.
Bye-bye.
Bye-bye, Rich.